splendid evening it is to you, Zimbabwe. Welcome to Special Focus, right here on Equity Access, your aerial perspective on stock market developments and on developments in the Zimbabwean economy. I'm Ibn Mabunda. Let's go. On Special Focus tonight, we reflect on recent developments in the Zimbabwean economy over the past week. The Confederation of Zimbabwean Industries, the CZI, released a manufacturing sector report for the year 2018, recording a 3.1% increase in capacity utilization to 48.2%. But a red flag is raised there should there not be policy reforms in the year 2019, as there could be a slump to 34.2%, which is a 41% decrease in capacity utilization in the country. Alrosa, the world's leading diamond producer, is coming back to Zimbabwe, having exited the country in the year 2016 following bad policies by government. At the same time, Anjin, which is a Chinese manufacturer or a producer, should I say, from China, is also coming back to Zimbabwe, having left the country in 2015, citing issues to do with policy reforms by government which were actually in the negative. Plus, ZIMRA, Zimbabwe Revenue Authority, released a report which cited the 38% increase in total revenue to 5 billion, aided by Professor Mthuli Ncube 2% tax. Well, it is interesting to note that in the 9 months to September, 30 September 2018, there was a record of $11 million in intermediate money transfer tax. However, from October to December, the figure shot up to $165 million, producing a figure of $177 million. Meanwhile, the last man standing in airlines, Rwanda Air, ditches the local currency, the bond, for the US dollars. Then later on the show, we'll look at the significance of Zimbabwe's presence at Davos for the World Economic Forum, as we wrap it up with a close look at what happened on the Zimbabwe Stock Exchange. For conversation on these and other issues, I'm joined in studio by our very own Chief Analyst at Equity Access, Respect Gwenzi. Respect, good evening and welcome to the platform.
It is my pleasure, thanks.
Splendid. Let's cut to the chase. Well, we see the week opening from Thursday last week, and from Friday last week, the Confederation of Zimbabwean Industries is publishing a capacity utilization report in as far as the manufacturing sector of the country is concerned. There we see an increase in their productivity, should I say capacity utilization to 48.2%. What were the major drivers of that?
Yeah, so in 2018, the major key driver of production was mainly the demand that arose from increased expenditure by Zimbabweans. So we saw a general increase in production coming from increased demand, and we also saw gains coming from industry protection measures which were introduced late in 2016.
Okay.
So these were the major drivers of capacity utilization, because naturally when there is increased demand, companies produce more, and so does capacity utilization grow. But I think it's key to note that our figures are still beyond average. We still have got a capacity utilization that is below 50%. So that's an interesting statistic. But I think it's also worth noting that in absolute terms, our actual produce, quantified in money terms, grew to about 1.7 billion in terms of our manufacturing output.
Okay.
And given that we have got we have a GDP of 24 billion, I think that's still a far cry in terms of what contribution should be coming from our manufacturing sector.
Okay, so that means we have got work to do to actually increase on that figure. Now, we are told that should there not be policy reforms, that figure could actually decline from 48% to 34.3% getting into 2019. What is the significance of that?
Yeah, I think the red flag is quite precise in terms of what needs to be done as an economy. We can no longer move forward without correcting certain fundamentals, especially on the current side. So coming from what the CZI has always been clamoring for, let's shift in the currency, let's move on to a more favorable currency in terms of trade, and CZI has been vouching for the rand currency, which is relatively less, which is relatively weaker to the USD. They say the USD is a stronger currency, therefore when it is going up, we can't be competitive to the region which is selling lower. So they've written several papers advocating for a randization of the economy, but precisely in the last few months they have been citing challenges in terms of pricing their product, and they wanted government to move in swiftly to re-dollarize, or maybe at least allow them to charge their sales in US dollars. So government has come in and it has stopped several manufacturers from charging their produce in US dollars, and that has been inflationary. It has caused suppliers to fail to restock, and going forward it has had a challenge of making viability of their businesses weak. So in recent weeks, CZI came out and said, given in the next few weeks, if government does not act in terms of solidifying the issue to do with currency, we might face challenges in restocking, because some of our suppliers are not able to still give us more against on the backdrop of a weaker local currency and a failure of the government to suit the nostro, the demands of the nostro, which have always been weak. So I think that's the background of it, but I think going forward it's important as a country to really look into our currency issue so as to ensure stability in terms of production and also availability of raw materials and even business viability, and that can be contagious to the economy if the manufacturing sector crumbles. And I think that drive to say we are likely to see a decline if we don't do certain things, it's also stemming from the fact that some of the products were protected back then by the SI, which was formerly SI 64 and then SI 122 when it was revised later on. So this statutory instrument of 2016, SI 64 of 2016, it protected certain industries from foreign competition. So what that had to do was to protect the local guys, because they no longer had competition from outside. So effectively it increased their capacity utilization, it increased their produce, it increased their revenues, and also their profits. But now that we are faced with a lag in terms of, we're faced with a crisis in terms of government's ability to pay in terms of foreign receipts, foreign dues, and also even aiding our own industries by retooling them. We don't have that money as a country. So these are some of the challenges that are cited to be possible dampeners of performance going forward. But I think it's quite clear from this that the highest point that we reached as Zimbabwe in terms of capacity utilization was in early dollarization, that's in 2017. And since then the capacity has really gone down. But I think also the aggregate in terms of how much, I think it has almost doubled to 1.7 billion, but it also speaks to additional capacity as years progress. So it's quite fair to say industry has done what it can, but the macroeconomic environment is quite challenging, and there has to be a finality in terms of currency issues if we are to see a sustained production base in Zim.
Fantastic. Progressing. Let's move on to diamond mining. An interesting information detail that we're actually getting there, that ALROSA, the world's leading diamond producer, is coming back to Zimbabwe. Just to refresh our memory, in 2016 they exited Zimbabwe because of poor policies by government. At the same time, a Chinese producer, Enjin, also exited in 2015. And 2019, they're coming back to Zimbabwe. Now let's have a quick look at the stats. That's 2010, 8.4 million carats. 2011, 8.5 million carats. 2012, we reach a peak of 12.1 million carats. Well, fast forward to 2017, we are down to 2.5 million carats in annual output where diamonds are concerned. What is the significance of the return of these two giants into Zimbabwe?
I think the background that you've given in terms of volume is quite important in terms of our analogy of the sector going forward. So I believe we have potential, but I think it's also clear, it's also important for us to really look back at the kind of best that we have. Zimbabwe is touted as having enough resources to supply 25% of the global diamond demand.
Okay.
And that's quite huge, but there's not been, there's not been some real study to really justify that, but it's estimated that we have such kind of reserves.
Okay.
But beyond that, I think it's also important that you picked statistics coming from 2011 going upwards. I think 2018 is quite a better year, upwards of 4-point-something million carats. But the significance of this tally is that if Zimbabwe is to achieve a certain tonnage, like if we are to go back to our 2011 or 2012 level of 12-point-something million carats, given the prevailing diamond prices on the global market, it simply means we can earn a good measure in terms of forex. Whereas today we are earning something less than 200 million. Okay. We can push that figure to close to 1 billion. And when you're looking at 1 billion in annual revenues compared to other big commodities that are selling right now, the top export for Zim is gold. It earns Zim about 1.2 billion annually, in fact, in this past year. So okay. When you look at tobacco, slightly below 1 billion. So if we can be able to get our capacity back to 2012 levels, it means we can get better value. Okay. So the significance is in that it will drive our exports up by a higher margin. So it can be a game changer. And we are not also as sure whether that's really the industry capacity, that if you get a 12-point-something million, we are done. So when you have the biggest player in the world in terms of Alrosa and also the Chinese participation, I am sure that we can easily beat the early dollarization record performance of 12-point-something million. I think...
Hold on a second. We are coming from 2012 where we were dealing with alluvial deposits. I mean, you could just literally pick diamond off the surface of Marange fields. But now that those are exhausted, do you really think that we could actually get to beat those figures again?
Yeah, what's important is to look at the nature, or to interrogate the nature of the players that we're dealing with. In the first instance, I don't think it was proper for government to have offered claims to people who had no record, or companies which had no prior record of mining. Okay. If you look at the people that were dominant back then, it was Mbada, which was literally a new company. Okay. And you have Anjin, a collaboration of the Zim army and the Chinese army, and you've got Marange Resources, less resource. I mean, they're less resourced. They're the junior player in that space. Okay. And DTZ and so forth. So if you really look at the depth of those companies which were operating then as individual players, you could easily see that they had no depth. Okay. In terms of having capacity to go deeper and so forth. Okay. But I mean, you know how reckless we were in pre-dollarization and post-dollarization era. The same guys controlling the economy, and unfortunately, part of that charade is still ongoing right now. But I think if we are to be fair, I mean, maybe they have learned a lesson. Okay. To say you have to bring in people of clout. We've got De Beers doing good things in Botswana, and we have got Anglos and whatnot they are quite huge in those space, in some of the economies that they operate in.
Okay.
So I think we can learn if we
Okay.
want to, and this is a sure game changer. If we have the right player with the right capacity, it means it's easy for us to get back to those levels and even surpass it. If we have two giant players, Rosa and maybe another bigger player outside of Angie, we can be able to do better. But I think it's also important to highlight that some of these deals are quite suspicious, given maybe some of the accusations back then, which were leveled against players like Anjin stripping our resources and whatnot. So we can be quick to say this can be beneficial to the economy, produce will go up by such margins, but I think we need players who are reputable,
Okay.
so that we are not labeled as blood diamond, because I think what was also lacking then, in terms of that quantum, you find that we were only selling it at suboptimal prices in Asian countries and whatnot, because
Okay.
our diamond could not sell on global markets. So
Okay.
it's important to have transparency when it comes to such mining activities. We need to be involved with players of good record, and we can be able to enjoy our own resources.
Oh, fair enough. I sure hope that we'll be able to harvest positives from such an engagement. Moving on, Zimra published a fourth quarter publication with the results of how they did actually perform in the year 2018. A 38% increase there in revenue to $5 billion, aided by, of course, the 2% tax introduced by the Finance Minister, Professor Mthuli Ncube. Well, these are the stats. Well, for 2018, as I just said, that we've got $5 billion, up from about 3.75 billion in the previous year. How did we get here? Would you want to shed more light? I mean, what has been, of course, there has been that 2% tax, but what exactly are we talking about here?
Okay, so when it came to the performance of Zimra in 2018, I think two key issues were involved.
Okay.
The first thing was pricing. That is, if you're looking at the level at which prices started to go up in the last quarter of the year, it was quite huge. The impact was quite huge. We are trading with an inflation of 42%
Right.
as at December,
Right.
and that's quite huge, coming from just 5% in September. So what that naturally does is to increase the revenues, that because you are now selling at 42% more in terms of price. So all things being equal, you would expect Zimra to also be increasing its own revenue by a similar margin in that respective quarter.
Okay.
So if you are to roll that back to the beginning of the year, I think there was an issue to do with demand. If you look at corporate earnings, you saw that corporate earnings were going up at a very faster pace. Most of the companies recorded double-digit growth rates in terms of their revenues.
Okay.
I think if we are to look at this chart, it quite breaks down in terms of who did what and how did they outperform each other. The traditional biggest contributor to tax is normally individual tax. Although it went up, because this difference shows what the government had targeted against what we actually did.
Okay.
I think the actual performance against the target.
Okay.
So when it came to corporate tax, we went up to 800 million, coming from just 500 million here.
Okay.
So that, coming from a target of 400. And so the government was expecting that by the end of the year, would have generated 490 million worth of corporate tax.
Okay.
But then the figure actually shot up, almost doubled to 809.
Okay.
What is composed of corporate tax? Corporate tax is a function of profitability. If companies get such revenue, 25% goes to government as tax. So this clearly shows how the nature of the profitability that Zimbabwe enjoyed. So companies were enjoying more. how do companies enjoying more? There is an aspect of revenue. So if your revenue is going up, then your profit is supposed to also go up, holding other factors constant. So that's why there is a clear outperformance in terms of this aggregate. If you then look at the biggest driver of revenue, government revenue in 2018, it was VAT on local sales. This is the money that's charged on every item that you buy in a shop.
Okay.
So that money went up from a target of 959 to about 1.15 billion.
Okay.
So local sales also, I mean VAT on local sales also reflects the nature of sales growth. So if you have a higher sales growth as an economy, it means your VAT also goes up. So
Okay.
essentially, these two key components are reflective of the high growth in revenue, which was driven by growth in aggregate demand in the Zimbabwean economy.
Talking about that, let's talk about the excise duty. There is a target of 851 million, which then comes up to $909 million in terms of the actual. I think we have a better representation of the targets vis-a-vis what we actually did experience in the year in question. Excise duty there, this is 2018, okay? Excise duty, that's excise duty there, that's 2018, where we have an actual figure of 908 million against 851 million dollars in that regard. Maybe let me make it smaller, and then okay, just to highlight the points in question there. That is what we're talking about. Okay. How did we get here? What were the drivers of that? Why the significance with that figures there?
This is a quite clear demonstration. I mean, given the representation that we did show here.
Yeah.
What is excise duty a function of? Excise duty is a function of sales as well.
Correct.
So if your sales are going up, it means there's an excise duty charged on those products.
Okay.
So this is clearly a function of a growth in sales.
Okay.
So if your sales grow, it means your VAT on local sales grow, your excise duty grows, your corporate tax also grows. So the growth in most of these aggregates reflects the growth in demand, whereas companies had to sell more than the previous year because there was demand. Where was the demand coming from? The demand was coming from additional money supply, which grew actually by between 30 and 35% in the whole year. So people became more liquid. They started wanting to buy more with their monies. Companies saw the demand, responded to the demand through more production, more sales, more growth in taxation. So this clearly, most of these are a reflection of the increase in aggregate demand in Zimbabwe in that respective year, driven by money supply.
Okay. Now, I would ask the question, how real are these growths that we're talking about? Earlier on, you mentioned the effect of inflation. Let's have a quick look at the inflation figures that we had in the end question. In November, our inflation was 31%. In December, our inflation was up to 42%. How did we get here? What is the significance of this? Where could we be headed in the year that is coming, in the new year that we have already just encroached onto 2019?
So from my own understanding, I believe inflation is one of the greatest threats to any outlook, growth prospects or stability in the economy that we may even project in the first place. What is this? This is a clear reflection of the average, of the growth in general price levels in Zimbabwe. So we are coming from a negative base just a year or so ago. So as early as March of 2017, we were in the negative territory, and in just under 1.5 years, we were to close in such high levels. What does it mean? What it means is that value is being eroded. on a day-to-day basis.
Okay.
Where is that value erosion coming from? Value is being eroded because there's too much money now chasing too few goods. We mentioned that companies had to increase their capacity. Companies had to respond to the demand.
Okay.
But they had to reach a point where they couldn't go further.
Okay.
Why? Because companies are subjected to allocations from the RBZ.
Right.
The RBZ gives them money to secure inputs from outside. The RBZ settles the company's debts from outside.
Okay.
So, looking at the composition of our exports and imports, you find that we are predominantly import reliant economy.
Okay.
So now that we got stuck, it means there is so much pressure
Okay.
on the scarce US dollars balances that we have in the economy. And how much is that? That's about 300 million.
Right.
What's our monthly import demand? It's about 600 million. What's our exports level? It's about 400 and something, 450 million. So there's always a gap in terms of trying to satisfy what we need. And what we need is mainly inputs. In what form? Petrol, diesel, electricity, soybean, and so forth. So even rice, and also wheat. What this means when you look at the fraction of these imports in terms of their aggregate value to the general import levels, you find that they are almost close to 60% of these key necessities. So once we have demand here, which is failing to be satisfied, or which is growing because money supply is growing, but money supply is not growing in line with the growth in the productive base or in the export base, which generate forex. So there's likely to be that pressure now. Money supply is growing, people have got more cash, but this cash cannot be converted to USD, which is minimal. So companies end up being stuck. Delta demands 7 million a month. Oil expressors demand 25 million a month. How much were they given in 2018? Just about 10 million. That's for the oil expressors. That lag in terms of what they demand now means there has to be a substitution effect. People now start to go buy their own produce, 10 packs in South Africa. They bring them, they start selling them at a local price, inflated foreign parallel market exchange rate. And as the broader economy fed into that wave, it meant the general economy had to reprice in terms of the exchange rate parity.
Okay.
This is how we have arrived to such inflation levels.
Okay. In your explanation there, you did mention the forex issue affecting the productive capacity of the businesses that we have trading in Zimbabwe. Is that the reason why Rwanda Air has had to actually pull out from Zimbabwe, citing challenges in their operations? Because now they just said that they're now actually charging in US dollars and not the bond anymore.
Yes, that is quite a given. Every other player is actually yearning to shift to a USD pricing.
Okay.
Some of the players can easily go away with it, but some cannot. Players like Delta have already been told that you can't charge your produce in USD terms. We will keep on providing some, because Delta controls a significant share of the beverages market in Zim.
Correct.
Upwards of 75%, both alcoholic and non-alcoholic. So what that means is there's likely to be a pandemonium if you let them price their produce in that way.
Okay.
But you can clearly see the same happening in fuel. 250% price increase. Delta just increased some of its product by just about 25%. So what is happening with Rwanda Air is a clear reflection of a decline in terms of currency confidence. It further dampens the sentiment around our currency. Everyone is trying to protect themselves against future failure of government to settle what is already due to them. If you are to look at what the representative authorities of LNS trading in Zim as at November, they said we are owed upwards of 100 million by the government of Zimbabwe. What does that mean? It means you can no longer operate efficiently if your money is stuck.
Okay.
We saw it with FastJet. Our money is stuck in Zim. We are no longer able to operate. Our cash flows have been affected.
That was $6.4 million
yes.
at the time.
So given what has been unraveling over the past few months, there is a serious crisis that's at hand. You can see by how government is trying to plug in one hole after the other. And as a player, Rwanda Air has to take a stance following all the other players. All the other players had already taken a move, and they finally said, okay, I think we should now cut our ticketing in local money terms and hedge ourselves by just charging exclusively in foreign currency. So it's clearly an inflation issue, but it's more of a currency crisis that we face that government has to deal with. I don't think it will be fair for us to go another 12 months without a solution to this crisis.
Okay, you mentioned crisis, as you rightly pointed out there. With Zimbabwe going to Davos for the World Economic Forum, the President Idi Mnangagwa had to return due to civil unrest in the economy as a result of a hike in terms of the fuel prices. And so we have our finance minister representing the country in Davos. My question is, what is the significance of Zimbabwe at the World Economic Forum vis-a-vis the crisis that we have playing back here? While they're out there trying to spread a good message about the country, there seems to be not much to reflect that Zimbabwe is actually open for business. But before you can respond, there's an interesting conversation that I'd like us to listen to that played out at the World Economic Forum, where we had interesting players there getting into a discussion that concerned Zimbabwe. Let's have a listen. That's the head of the president of the Rockefeller Foundation leading that conversation there. So let's have a listen.
But you really need that to spread, because we need the roads, but we should think of the capital markets, the roads also there to be built. And it's a very, very important role, where much more important than a single dollar. Nobody else can do that except the governments with the aid of the IMF and the World Bank and IFC, because you're seeing a lot of the best cases and the worst cases. The cost of transacting in Zimbabwe for one stock is 4%. So how much return do you need to make to just cover that cost before you make any other return?
Yeah, and Zimbabwe is also an example of
other issues
yes, related to governance. But we.
Well, viewers, that was Asfani Beshlosh, founder and CEO of a top asset management firm which is known as Rock Creek, which manages assets worth $14 billion across the world. What is the significance of such a report at such a global platform?
Your first question referred to the significance of Zimbabwe at such a global level. I think in terms of how the whole world looks at Zim, I don't think there's much significance in terms of the value that we are giving out to the world.
Okay.
But in terms of the function giving us value, it's clearly a prestigious opportunity where you get to meet investors, where you get to outline your vision as a country, lure investors and so forth, and also interact. And I think it was quite fair for Zimbabwe to be represented at that. And I think the president made the right decision to leave out the Minister of Finance to do some of the work there in terms of driving the investment opportunities that are there for Zimbabwe and so forth. But most importantly, at this point, the timing of the fuel price hike was not okay ahead of Davos.
Okay.
Why? Because prior to Davos, in that same week, that's the very week that there were reports right across every international television,
BBC, CNN,
exactly,
channel,
that Zimbabwe is under fire. And indeed, we were under fire. So clearly that does not augur well when you're trying to look at trying to lure investors into your
Space.
respective market. Yeah, but I think Mtuli did well to represent Zimbabwe. Although it gets to be tough, you get to be asked tough questions, and some of the time he had to cover in from a political rhetoric, which I don't believe he should, because it's not his prerogative. He has to stay within his lane, trying to sell Zimbabwe as an investment destination. But in the absence of political players, he had to obviously play a part. And coming now to the real damage, I don't think what happened last week summarizes it all. When you're looking at capital markets, when you're looking at the taxation system in an economy, ease of doing business, and so forth, it's quite a broad set of things that investors look at. Some of these issues to do with violations of human rights, sometimes it might be a passing phase. But when you're looking at legislations that govern investment, which is what investors are concerned about. So we've got this madam who runs a $14 billion fund, or a $14 billion asset management in US, citing our taxation, particularly our capital markets taxation in terms of share trading, where you have to forego at least 4% before you can realize a return. That alone has got nothing to do with the shutdown. It's nothing. It's just about a bad policy.
Okay.
How are you relating your local tax system against another country's tax system? So if there's bound to be a variance, if there's bound to be an higher taxation, it means you become less favorable.
Okay.
So this is exactly what she was trying to highlight, that capital markets have to be more. They have to be more lucrative for people for potential investors, and clearly Zimbabwe does not have that kind of that kind of environment when it comes to the financial sector, and it's even more when another Rockefeller executive mentions that we also have got other governance issues. So corporate governance, lack of proper, we are failing to even run our public institutions. We can't protect investments. We are corrupt, and all those issues feed into what we can attract as a developing nation. So we have work to do. That's what Davos has shown us so far.
Okay. From the clip, you did realize that President of Rwanda, Paul Kagame, was also a part of the panelists. Rwanda, they're being used as an illustration of a country that has been able to bring about reforms to their country with positives recorded in the period of time. What perhaps could we do at this point to get Zimbabwe back on track?
Yeah, I think Kagame is credited for one key thing that he has done for Rwanda. Bringing people together as a president is something important. We are seeing the same happening in Kenya right now. The opposition leader and the president, they're working together to push the economy forward. In Kenya, just after the genocide, that's where Kagame came through. He has managed to bring the nation back together. But most importantly, he had built institutions that fight corruption. There is no corruption in Rwanda as we speak. Investors want to sleep knowing that their capital is safe, which is the kind of environment that Ghana has provided to investors. So coming from negative growth of almost 11% in the 90s, in the early 2000s, growing at a faster rate of above 10%,
Okay.
and lately just below 10%. So that inspires confidence, that inspires real value in terms of what an investor can expect from such an investment. But more importantly, Rwanda has also managed to put together what's called a sustainable economic growth.
Okay.
This is a growth that also looks at the most deprived sectors of the economy, be it women, be it such things like energy sector, health sector, and so forth.
Right.
He's modernizing most of these sectors and underprivileged sectors of the economy. It becomes sustainable in that if you are able to push everyone through to enjoy the growth that you are accruing as a nation, it means there will be no unrest, there will be no incentive to even steal. So that's what's called sustainable growth. So sustainable growth looks at other often overlooked sectors, and Kagame has been able to push through. So I think what we can learn as a nation is that these things are achievable in this side of the world.
Okay.
We just need to put our house in order, especially when it comes to corruption. Also when it comes to policy measures.
Right.
We should have policy measures that are more favorable to capital. And clearly, under the Mugabe regime, we didn't have that. In the ED era, we are yet to see how solid he can go. So that's my position.
Quite insightful. And lastly, let's have a quick look at how the stock market did perform in the week that just passed. Closing there, the Osho index up 0.64%. Of course, the Zimbabwe industrials going up 0.65%. ZSE top 10 going up 0.77%, while the mining's index was on a constant. Please take us through. What are the major drivers of that, given the prevailing conditions?
Over the past few weeks, the stock market has been really pushing to go northwards.
Okay.
And this is more of a trend reversal from what we experienced late in 2018 and getting early into 2019.
Okay.
Investors have got an appetite to buy, even though the prices look higher. We went up by almost 56% in 2018, and we actually went up by 150% in the previous year. So the market has been going up.
Okay.
What has been driving this growth? Of course, earnings have been growing, but there is significant risk that's associated with alternative investment, notably pure money or more liquid resources like a mere bank balance.
Okay.
This has driven most people to buy stocks even though they are overvalued. In other instances, we've got investors who have been forced to retain their money within the stock market simply because they can't push out dividends, they can't push out portfolio disposals. So I think in the week, it's important to highlight that earlier on Wednesday, we saw the market we saw the market first on recovering and then going down and then recovering again. That trend was inspired by some trades in Old Mutual.
Okay.
What happened on this particular day, this decline and then a recovery. So this is Old Mutual going down, and we then saw a recovery as we went. So there was a big trade in Old Mutual, which is one of the stocks that are used in terms of gauging how investors feel about our currency.
Okay.
There's always an Old Mutual implied rate. So the big investors who could move 1 million shares, that's quite over several millions in actual dollars of trades.
Okay.
So what that means is you are finding a player who is coming from one stock and then on the next day going into the other stock.
Okay.
So we saw money moving from Old Mutual into Cassava late into the week. And that kind of swap is what I'm referring to when I say some of the investors don't have anywhere to go, because if they sell, they can't keep their money as real balances.
Okay.
So if they sell, what they can only do is to look for an alternative where they can place their money, look at a small bargain, buy on it, and then maybe sell at a later stage. But overall, there has lately been an appetite to want to buy, as I've said, which is reflected by initially a 10-day rise, consistent rise in stocks, and then a bit of a decline, and now again a recovery. more so after the shutdown period. Investors becoming more pessimistic about the outlook of the economy. People feel that we are at crossroads. There is likely to be, an introduction of a local currency in the not so distant future. And what that means is additional pressure on stocks.
Okay.
So there is pessimism which is driving stocks upwards. And I believe that is likely to be the case even in successive weeks and months to come. But it's also fair to highlight that the stock market is clearly overvalued using the conventional measures of calculations. But that's the case.
Well, thank you, Respect, for those insightful thoughts. Well, then, just before we close, we lost our musical icon, Tuku, but it seems that the whole Fino has now taken on a celebratory mood to celebrate the life that Zimbabwe did enjoy.
Yeah.
And tomorrow there is an event at the National Sports Stadium. Are you going to attend?
Yeah, I may, but I think it's important that we have learned something out of this death. It's bringing Zimbabweans back together, irrespective of our political alienation. I think it's a moment that we have to capitalize on to, bring back our Ubuntu. And finding each other from the current crisis, which definitely demands all sides to be sober enough to realize that after all, we are one people. We this is our country. We've got no other country. We have to sort things out. So I think his death came at a time where Zimbabwe needed something to bring its people back together, and this is clearly the opportunity. But may his soul rest in peace.
Sure. Thank you, Respect. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, as well as visit our website, www.equityaccess.net. Once again, thank you and good evening.